Everyone is asking if the housing market is crashing or is it just correcting? Because under the hood, it's probably neither, honestly. Right now, we're seeing rates continue to fall, mortgage rates. This morning, they're about 6.23% as the 10-year Treasury dropped under 4% yesterday. We saw these mortgage rates come down. And so today on the Ohio Housing Nerd or the Housing Nerd channel, we are looking at the latest Redfin data because they're saying that new listings creep up as would-be home buyers back off, haunted by high prices and economic unease. So we're going to dissect all this. We're going to unpack what this really means for buyers and sellers out there right now. It's a weird market, folks. In fact, 76% of all metros still have home prices higher than this time last year. So the majority of metros still have higher home prices than 2024. And we have inventory of homes for sale is actually shrinking, which is counterintuitive to what you would really think would be going on in a crash, right? And not only that, but new listings are increasing. So we've got new listings increasing. We've got active listings falling. And we have pending sales falling as well. So it's definitely an odd market, and it really depends on where you live. But my name is Jason Ferrier. Welcome to the Housing Nerd channel and my weekly ritual of a Redfin update. This is your chance to learn about the housing market. And so what I do is I look at the national picture first and look at national data. And then we're actually going to look at an article from Moody's that talks about where home prices will be over the next 10 years. It's kind of an interesting article. Maybe it doesn't tell us in concrete what's going to happen, but it's some interesting stuff to think about. And then we're going to look at, obviously, the individual metros that you all requested for me to review. And if you have a metro you want me to look at, drop it in the comments below. We're going to do this for about an hour and 15 minutes today, kind of a short one. I've got a great interview with somebody I think you're really going to enjoy once that video comes out later in the next week or so. So let's look at this Redfin article. And again, if you have comments on the housing market, especially what's happening in your area, like, are you seeing more homes for sale? Are you seeing fewer homes for sale? Are you seeing prices drop? Are you waiting on the sidelines? Like, what's happening? I really want to know. All right, let's hit this Redfin article, and then we'll jump into the Moody's article. Then we'll look at the metros. And so they start off their article by saying, even though mortgage rates are sitting near their lowest level in a year, house hunters are spooked by stubbornly high home prices and jitters about a possible recession and the government shutdown. So comment and let me know, is the government shutdown really affecting the housing market? I don't know. I closed a couple deals this week. Didn't hear anybody mention that the shutdown was going to affect their decision. We didn't even talk about it. So I'm not sure that makes a big difference, but depends on where you live. And obviously, if your job's affected by it, I'm sure that matters. But they say new listings of U.S. homes for sale rose 4.1% year over year during the 4 weeks ending October 12th. That's the biggest increase in 4 months. So new listings all of a sudden have returned, right? For a while, they've been falling. So it's nice to see them return. Most sellers are entering the market because they're hoping for lower mortgage rates, and a small improvement of affordability will attract some buyers. The average mortgage rate is 6.3%, just shy of its lowest level in the year. And I just showed you that it's now 6.23%, right, as of this morning. So it's definitely falling. I mean, it'll be interesting to see where it falls today if the 10-year continues to fall. But many of y'all say interest rates don't matter. You just want lower prices. Which I can understand, but a lot of the U.S. isn't really getting what they want right now. So It may be lower rates instead of lower prices. Who knows? It should be interesting to see how that plays out. They say, let me look at another section of this article here. Buyers stay in the shadows, spooked by financial jitters and rising prices. Pending home sales are moving the opposite direction of new listings, falling 1.2% year over year. That's the biggest decline in over 5 months. The biggest decline in over 5 months. Homes are also taking a long time to sell, with the typical home sitting on the market for 48 days. Many buyers are still sitting on the sidelines due to stubbornly high sale prices and economic uncertainty. The median home price is up 1.9% year over year, the second biggest increase in 6 months, keeping payments elevated even though they're down from their all-time high. And this Redfin agent, Joe Chavez in Kansas City, says buyers are hesitant because of concerns about job security and high mortgage rates. Even though rates have come down from their peak, a lot of people are waiting on sub 6% rates before they buy. Okay. And in Kansas City, where there are tens of thousands of government job furloughs and potential layoffs are hitting hard. One client who works for the federal government started house hunting 2 years ago, then paused when he was furloughed last year. And he had just started looking again, but now he's not sure if he's going to buy because his job is uncertain. He may be relocated out of state. All right. Let me know what you think about that. Like, I think the study that I just saw was 65% of Americans are moving forward with a large purchase, whether it's a house or a car. They should be buying a car. But anyway, a house or a car or something, they're moving forward, 65%. So there are a portion of people out there that'll get spooked by something like this. There are a larger portion that are like, you know what? What am I going to do about it? Nothing. I either got to make a decision to either move forward or not. And so it's like, I don't know. It seems to be just like kabuki theater to me. They do say, though, in Washington, D.C., home sales are pending sales are falling more than they are nationwide. Pending sales in D.C. are down 6.7%. We'll look at D.C. more when we get to the metros in a few minutes. And the typical home is taking 43 days to go under contract, 9 days longer than last year. On the flip side, new listings are up 10% basically. And that's the third biggest increase of the 50 most populous U.S. metros. And that's in D.C. as a lot of people try to offload their homes. All right, now let's look at some of this indicators of home buying demand and activity. We got the daily average 30-year fixed mortgage rate. We know that's 6.23. They say 6.27, but it's down a little bit. It's unchanged from last year, according to Mortgage News Daily and Redfin. It's the same as it was last year. So rates really aren't down compared to last year. They're just down from the beginning of this year. It's actually a 12-month low, up from a 12-month low of 6.13% 3 weeks earlier when the Fed cut, right? We saw rates, before the Fed cut, we saw rates drop. Then the Fed cut, and we saw rates go back up. Now they're falling again. Weekly average 30-year fixed mortgage rate, 6.3%. Mortgage purchase applications down 3% from a week earlier as of week ending October 10th. So somebody on the stream right now, real quick, let me give a shout out to Steve, the mortgage nerd, this guy right here. Steve's a mortgage professional. Steve, let us know, or mortgage nerd, if you don't want me to give your identity away, I guess I already did. Let us know in the comments, like, what are you seeing as far as demand goes? Like, are you seeing, be honest, like, are you seeing more applications? Are you seeing fewer applications? Are you seeing buyers go, you know what, I'm going to wait? Or, you know, are the government shutdowns affecting you, affecting your business? I'd like to know. Put it in the comments for our viewers, because I'm sure they would be interested in knowing what you're seeing on the street versus, you know, an article from Redfin. So let's go back to this. Yeah, so mortgage purchase applications down 3% from a week earlier, meaning there aren't as many people applying for mortgages as there were last week. 20% more people are applying for mortgages to purchase homes, not refi, versus last year. So you've got 20% more applications, but pending sales are down 1.6%. And And so what I'm curious about, Steve, when you're commenting, does that mean that people are applying and getting declined? Or does it mean that people are applying and just sitting on the sidelines waiting? I don't know. I'm curious about that. Redfin Homebuyer Demand Index, I don't really care about that. Google searches for homes up 18% from a month earlier, up more than 20% year over year. So you've got more people searching for homes online. It just hasn't translated into sales yet. Touring activity is up 15% from the start of the year. It's up about 13% year over year. So more people seeing homes. I mean, these last 4 stats haven't really changed that much. Like, you've got more people applying for mortgages, more people touring homes, more people searching for homes for sale on Google. But at the same time, don't get it twisted, we're not seeing it come through in the sales yet, really. I mean, in certain metros we are, but across the country we're not. All right, let's look at these stats. These are like the top line stats for prices and inventory. Some really important stuff here, folks. You got to pay attention to some of this. Like, nationally, it's not as important as it is locally. So look at some of these highlights I go over, and then look at what they are doing in your area. And the more granular you can get, the better. But overall, median sale price is $389,750, up 1.9% year over year. Biggest increase in over 6 months, except 4 weeks ending September 28th. So second biggest increase, I guess, in 6 months. Yeah, home prices have not dropped below last year. Median asking price, $399,947. Median monthly mortgage payment, $2,564 at a 6.3% rate, nearly $300 below May's record high. So home payments in general, or mortgage payments, are lower from the high, but they're still way higher compared to a couple of years ago. But guess what? Like, I hear people all the time say, well, we need to get back to like the way the housing market was before COVID. Well, before COVID, home prices were going up. Inventory was going down. That's kind of where we are right now. Now, granted, it was much more affordable, but like, I don't know. This could be the new normal, folks. Like, what you're going to see today, I think, points to the fact that in many locations through the U.S., what we're seeing right now, just grinding sideways, could happen for many years. Many years. Pending sales, new listings, active listings. These 3 metrics are very, very important to watch. What's weird is I've heard people lately on YouTube start to dismiss these things. Like, well, those aren't really that important. We need to look at demographics, or we need to look at buy now, pay later. And those are factors that drive the activity in the housing market. But if you're really looking at the housing market from an honest standpoint, you need to present this data and be honest about it. Like, I don't care if this number goes up or down. Doesn't bother me. I mean, I just present it to y'all. Pending sales, 78,677, down 1.2%. That's the biggest decline in 5 months. I'm not going to run from that data. Even as a realtor, I'm an investor. I'm a YouTuber. Like, I don't care if it goes down. I'm just going to give you the data. It's down. There are not as many people buying a home, putting a home in contract as there were this time last year. Just not as much demand. New listings, 89,756. That's up 4%. That's the biggest increase in 4 months, meaning you've got more people putting their homes on the market than you did this time last year. 4% more. Is that enough? We'll find out in a minute, but it is more. So that's good. You want new listings. If new listings could explode as we enter winter, man, that would help a lot with inventory come spring. As a realtor, I'll have a great spring. Like, our business would explode if we had a lot of new listings hit the market in this winter. That would help us a lot. Plus, great opportunity to buy. Like, for me, I mean, and you, I'm always looking for new houses or houses and to add to the portfolio. It would be a great opportunity to do that if there's more new listings, especially if there's lower competition. Active listings, 1,205,000. Look at this, only up 7.5%, y'all. 7.5%. As a housing nerd, I look at that and go, how can you not talk about this as a housing analyst? Without naming names, I'm like, I don't get how you can't present this data and be honest with people that it's the smallest increase since February of 2024. New listings have been down. Active listings are falling. It is what it is, y'all. It's not because they're being sold. In many locations, they're just being taken off the market because the seller doesn't need to sell. All right, average sale to list price ratio. This one's interesting, 98.3%. That's down from 98.7%, meaning there are the people are getting a discount. People are getting a discount out there. Now, average is 2% discount, whoop-de-doo, right? But there are people that are getting a bigger discount. But still 23% of people up here, you can see, are paying above list price. So, all right. Where are prices rising the most and falling the most? Cleveland, Detroit, Providence, Anaheim, Warren, Michigan are where home prices are rising the most. Metro's the biggest year-over-year decreases. No shock here. Austin, Dallas, Atlanta, Jacksonville, Florida. Jacksonville, Fort Lauderdale. Those are just, I mean, those are our standard practice. But it declined in 12 metros out of 50. So 76 of the top metros still have year-over-year price increases. If you learn anything today, you should learn that every market's different and learn what to watch in your individual metro, right? In your individual neighborhood. But no doubt that home prices are not declining in 50 of 50 metros. They declined in 12 of 50 metros. Tampa, West Palm Beach, San Fran, the Steel City of Pittsburgh, and Fort Lauderdale are where pending sales increase the most. Remember, I just told you, new listings, if they explode, if we see an explosion of active inventory, that's great if you're in the real estate business. Like there's this weird idea that if rates crash, if inventory explodes, that realtors will be doomed. That's the opposite. We want more new listings. So the fact that pending sales are up in Tampa, West Palm Beach, San Fran, even Pittsburgh and Fort Lauderdale, I know there's more inventory there than last year. And that helps when you're out trying to buy a home. There's more to choose from. There's more opportunity to negotiate, especially if there's no competition. San Antonio, Seattle, Denver, Las Vegas, and New York are where pending sales are falling. New listings, this one's crazy. Tampa, Pittsburgh, Washington, D.C., West Palm Beach, and Philly all have the most activity in new listings. More houses hitting the market. Look at Denver, San Fran, Anaheim, Nashville, and Riverside are where new listings of homes are falling. Riddle me this. If there's a bunch of distress in Nashville or Anaheim or San Fran or Denver, like people can't afford their Airbnb, mom and pop landlords going broke, buy now, pay later, property taxes, insurance. If there was massive problems, investor fraud, empty homes, whatever you want to call it, if there's massive distress in a marketplace, you're going to see people list their homes. You may see a lot of financial, economic problems, but then you're going to see them put their homes on the market. If you're an investor and you have, one of these 15 million vacant units, not homes, they're units. If you had 15 million vacant units and you were one of those landlords, you would put it on the market if you're distressed. Tell me I'm wrong. Well, we're not seeing more people list their home in Nashville than we did last year. Crazy. Same with Riverside, Anaheim, San Fran, and Denver. A lot of people are just yanking their listing from the market. It bothers a lot of people too. I don't know why it bothers people. They call it rage quitting. And I'm like, rage quitting? They're just making a decision. They're like, well, I don't want to sell. I'm going to take it off the market. Anyway, that's what's happening from an overview standpoint. But let me go to the data now, and then I'll look at some comments. All right, so this is their weekly data set. We're just going to run through it. Look at new listings right here, up 4.1% year over year. You can see it. 89,756. It's definitely ticking up a little bit or sideways somewhat. I guess it's not going down anymore, but you can see how it's been dropping until now, which is good that at least it's leveling off. Let's look at pending sales. Look at this. Pending sales, look at that, still sluggish like a wet sponge. 1.2% down year over year. Now let's look at the next one, which is active listings. This is gonna blow your mind. Look at these active listings. Look at this. I mean, they were like really elevated. More homes for sale, right? We had like 1,272,000 homes. Now we just continue to drop to 1,208,000. It'd be nuts if this fell below last year at some point. It could. It could. People keep taking their homes from the market and they're like, I don't need to sell. I'll wait till next year. If new listings don't continue to rise, that could spell trouble for next year. On the other hand, we need more new listings. So this is not a sign of a crash. It's not even a sign of a correction. We need more active inventory, no doubt. We had 4 million homes for sale during like 2009, 2010. 4 million. Now we've got 1.2 million. So let's see. Let's go to median sale price. Up 2%. I mean, you look at last year, it didn't fall underneath 2023. And look at this year, it didn't fall underneath 2024. It is what it is, folks. The median is in the middle. Higher end homes are still selling. And homes are still, people are still buying homes. I can assure you of that because I've closed some in the last week. People are buying homes. 4 million people will buy a home this year, around 4 million people. So somebody's buying homes. It's not like nobody is, but it's not near like it was a few years ago. So that's what's kind of happening from a overview level. I would not say it's a crash at all. I would say it's a slow correction at this point. It is. And this, let me take some comments. Then I'm going to share this Moody's article with you because I think it's really telling. He did a good job in it. What's up, Blue Bonnie? Good morning to you. How are you? Yo mama, Joe mama. Nobody wants to catch a falling knife. I agree. No one wants to catch a falling knife. That's why you have to make an offer. If you think home prices are going to continue to fall, that's how you should make an offer, right? Like if you're like, oh, home prices are going to fall 50%. Like during the GFC, home prices fell about 30%. They didn't fall 50% nationwide. They fell 30%. So make an offer that's 50% under the asking price. If you think that's where the property should be valued, that way you're not catching a falling knife. The beauty of the housing market and being in real estate is you can pivot to any strategy you want based on the market. It's when you ignore the market that you get trapped. So it's kind of common knowledge for y'all watching YouTube and TikTok and Instagram and Facebook and whatever else you watch. It's common knowledge now, correct me if I'm wrong, that people think the housing market's going to crash. Okay, well, if you think that's what's going to happen, make an offer as such. That's all. Just change your game plan, man. Easy. Evil Overlord. Cool name, man. Evil morning to you. What's up? Hey, it's Halloween. A bit evil and spooky, right? Depends on whether you're wearing chainmail gloves. Oh, if you want to catch a falling knife, right? Chainmail. That's awesome. Blue Bonnie, what's up? Please look at Grand Rapids, Michigan. Yes, I will do that for you. Let me star it. We'll do that one. 10-year is at 3.99 right now. Amazing. Gas prices also declining. Food is up though. Boo. Right. Higher for longer. Higher for longer. 10-year hit 3.94 early this morning. Yeah, it did. 3.94. Yep. And I mean, I wonder if it'll continue to fall. Who knows, right? It could. 10-year hit its lowest in a year. Yeah, it did, right? The interesting part is, correct me if I'm wrong, mortgage nerd, but like we saw higher interest rates. We saw higher mortgage rates right after the Fed cut last year, but those higher rates stuck around for a while. This time around, they went up when the Fed cut, but they've come down quickly since then. I think. Tell me if I'm wrong. I'm seeing 80% refinances and about 20% purchases. Great info. Business is picking up for sure. Okay. Are you seeing more purchase applications? One thing I want to point out is that although rates are not declining as sharply as we are wanting, we are seeing a decrease in the cost for said rates with loan level pricing adjustments, aka points. Good to know. The other thing to think about is the spread, right, between that 10-year and your mortgage rate. I think historically it's like 1.5 or 1.75 or something. Now we're like over 2. So I think there's probably 50 basis points there of a spread between the 10-year and mortgage rates, meaning banks have more cushion built in right now than they have historically in the rate versus the money they're borrowing. But they may at some point, that may get compressed, bringing rates down. Like we could fall underneath 6% purely from that compression, right? Mortgage spread compression, I think. I'm not a mortgage expert, but that's what I've read. Thanks for pointing that out. I got to get you on the channel, man. For example, a 6.5, this is great info, dude. For example, a 6.5% rate last month may cost 1 point. However, that same rate now would be a par rate costing no points. Great. I have a pre-approved buyer right now that is sitting on the sideline waiting for a rate to go down so he can buy more home. Good to know. Wow, this is great info, man. When buying a foreclosure, do you get title insurance after you bid on the house or before? Great question. So the title insurance, Tyler, is that's something that the title company will give you. They'll give you the policy at closing, but what you can do is submit the property to a title company. They will run a title search and before you buy it. Like if you find a property and you're like, I want to make a bid on the foreclosure, you could take that address, go to a title company. They're going to charge you probably a lot of times, but it's better than buying a problem title property. And so they will run a title search and then they can give you a title commitment that says, hey, here's what we found on the title. Here's how we'll insure the title. And so when you read through that, depending on what's going on with the property, like if there are liens on the property or mortgages or tax liens or whatever, mechanical liens, HOA liens, it's going to show you that. And it's going to say, we can give you title insurance if you remove these things, meaning, pay off the loan, those things. But a title company could explain it a lot better than I could probably. But yeah, you can ferret out those problems before you buy. Then once you close, they give you that title insurance. If that makes sense. They give you the policy because you buy it at closing. I have a pre-approved borrower right now that is sitting on this. Okay, you already said that. Sorry. Title insurance is insuring title, doesn't have anything to do with it, and is part of the settlement escrow. Did you say mortgage insurance? I think mortgage nerd, he meant title insurance. Evil Overlord, I think you'll see a lot of foreclosures. They could be. I've been looking at houses in the pipeline in my local county, and damn, there's a lot of estates going through the system too. Yeah, listen, you're going to see foreclosures. Shoot, folks, we haven't seen foreclosures for 3-4 years, right? 5 years, whatever, right? You're going to see foreclosures. I mean, they're building behind the dam, right? You'll see that. One thing you have to remember is 85. I heard this from Melody Wright. So shout out to Melody Wright. She confirmed that 85% of all mortgages are insured by the government. That's different than the GFC, right? So you've got 85% of all mortgages are backed by the U.S. government because the government controls Fannie and Freddie. So what does that mean, housing nerd? Well, it means that if things got really, really bad, don't you think the government would be there to backstop it? Is that a right thing to do? No. But is that the reality? Yes. We're talking reality, not make-believe, right? So I think you will see a lot of foreclosures. I don't know the percentage changes, but I think it's gone up. The percentage changes look very ominous, Evil Overlord. They're like, oh, we're up 25%, 100%, 1,000%, but that's because we didn't have any. But make no mistake, there are a lot more foreclosures. Super Tech Boy, make sure you check for liens on a foreclosed home. Definitely got to do that. Can a short sale and foreclosure price be negotiated? A short sale can, but you're usually dealing with the bank. You can get a discount on a short sale off the list price that you see on the MLS. A foreclosure, if it's an auction, I guess you can negotiate it by bidding what you want and seeing if you get it. But unless you're buying, like if somebody's going through foreclosure right now and you contact them or you see it on the MLS and you find out it's a foreclosure, you could still negotiate the price if it's not at auction, I guess. So yeah, I would always negotiate if you can. You may also be responsible for unpaid property taxes on foreclosure. I know somebody who ran into that. I know somebody who bought at auction on a foreclosure and the house was already burned down. It was an empty lot. They never bothered to go look at it, which is a major mistake. Just drive by it if you have to. Like you can't trespass unless they do showings. But many foreclosures, you can't go inside, but you can drive by and make sure that property's there. But to Super Tech Boy's point, do your due diligence and build in a ton of cushion. Like pretend the thing needs everything on the inside, you know, cosmetics, wiring, plumbing, roof, windows, foundation. Pretend it needs most everything unless you can confirm otherwise, because otherwise you're going to find a gremlin in there that's going to bite you. Okay, let's get to some metros here. We're going to run through. Now, you may know I have a YouTube channel, The Ohio Housing Nerd. But nonetheless, I'm going to just hit on Columbus here real quick, and because I'm seeing some things happen here. So new listings in Columbus, Ohio, we're up 1.4%, so still sluggish on new listings. If you have a metro you want me to look at, put it in the comments below, and hit the thumbs up if you're on this. I don't think there's a lot of people on right now, but hit the thumbs up for me, at least. That's your price of admission. All right, let's do... let's see. That's new listings. Let's do active listings. Active listings in Columbus. Yeah, I mean, we're elevated from last year. We've got 16% more active homes on the market. The problem is they're not homes that, I mean, a lot of these are older homes that need complete renovations, like 100% renovations. Half of these, I just looked at the stat. Half of these homes, about half of them, half of the 7,477 were built before 1950. Half of them. Yeah. Let's see. Do median sale price. You look at this, $348,000. It's more expensive to buy a home in Columbus, at least it has been over the last few weeks, versus Houston, Texas. Can't believe it. Up 2%. Home prices here are relentless overall. People are ready to buy. Again, I closed a couple this week. I've got more closing coming up this month. More buyers in the pipeline, more people wanting to buy. Like people just keep going. Like they're not deterred from the noise, I guess. As long as they buy smart, right? All right, so that's Columbus. Let me do Cleveland. New listings in Cleveland, Ohio. Where are they? Yeah, look at this. New listings are up 7% in Cleveland. A lot more homes hitting the market, which is good. Got to have more inventory to bring prices down. Active listings. Active listings are falling kind of like they are nationally, only up 7% in Cleveland. Let's do median sale price. Median sale price still elevated, $247,000, up 12%. I heard somebody recently say that home prices are down year over year in Cleveland. I don't know what they're looking at, but they're not looking at this because they're up 12%. And they haven't been down year over year at all this year. A lot of investors buying Cleveland. A lot of old homes. Let's do Cincinnati. Cincinnati, the nasty natty. New listings in Cincinnati. They beat the Steelers last night. That was a crazy ending of the game. I didn't stay up to watch it, but I saw the highlights. I was like, man, I hate losing to the Bungles. New listings in Cincinnati up 3.5%. More homes hitting the market. That's good. At least there's not fewer homes hitting the market. You know what I mean? Active listings, 5.8% up year over year. That's crazy. You'd think Cincinnati would have more active inventory, but they don't. To be fair, though, like if I look at, like, let me bring in this is something, and this data is free. You can go to this Redfin data center anytime you want, look at your metro, your county. We can go to the county level. But if I look at 2023 and 2024 and the active listings in Cincinnati, look at this. Last year, they were up 70% in active listings in Cincinnati. 70%. So to be fair, like, you can't say, you know, when I look at active inventory only being up 5% right now, not that big of a deal, because we saw a 70% increase in active inventory last year. Columbus didn't experience that. Cleveland didn't experience that, but Cincinnati already had a lot of stuff on the market. So now there's even more homes on the market. All right, let's do median sale price. Up 4%, $305,000. To me, this does not look like a crash. Looks like a correction. Like, instead of home prices being up 8%, or where they were the year before, 11%, 7%, now they're up 4%. To me, that's like a correction thing. It's like, hey, home prices the growth is not accelerating. We're not up 11% anymore. We're up, a few percentage points. Excuse me. So that's what I think is happening. But that's just my opinion. Let's see. That's median sale price. Now let's go to, I don't know if I have this one. Grand Rapids, Michigan for Blue Bonnie, right? Blue Bonnie, you wanted to see Grand Rapids, Michigan. See how they're doing. See what's going on in the state up north. New listings are down 1.9%. I mean, again, like, you can't, it's hard to have price discovery. It's hard to have deals pop out when you're down with new listings like this. Basically where they were the last few years. Right? I mean, they're under 2022. It's crazy. It's crazy. Let's see. Active listings now. Look at that. Down 0.83%. They have fewer homes on the market in Grand Rapids, Michigan than you had last year. Not by much. 2,193 homes. Last year you had what? Three homes difference. So just like a smidge. But it's not exploded. My point is, you don't have like 40% more listings on the market. What's happening with price? Yeah, I mean, every year, if you can't tell this already, you should know this. You may hear people tell you, and look, again, I don't care if prices fall. I don't care if they go up. I mean, I would hope that they would normalize. I want people to be able to afford a home, but like, it doesn't affect me personally. Like, I'm not like, oh, I want it to go up or I want it to go down from like a narrative standpoint. Home prices fall every fall. I mean, every fall, home prices decline month over month because it's fall time. Then the winter time, you can see what happens. It gets cold. People are, or it's off season. And then in the spring, they go back up. It happens all the time. I mean, look at any chart. That's what you see. So you'll hear people say that home prices are falling right now in half the markets. I heard Nick Venture Consulting say that. And I was like, that happens every year, brother. That's not newsworthy, but it sounds good, right? For us YouTubers. Median sale price in Grand Rapids is like sticky. Look at that. 347 up 4%. Goodness gracious. Eesh. Yeah, not good. Not good if you're trying to buy there. I don't know what you're seeing, Blue Bonnie, but that's rough. Whoops. I'm sorry. I'll come back to you, McConaughey. I'm just looking to see if Blue Bonnie can tell me what's happening locally. No. Condo median price in Reno is down 26% year over year, according to Redfin. Yeah, condos are taking a beating right now, right? If I'm a buyer right now and I don't, and I'm okay, and I want to buy a condo, even if I'm a buyer and I'm like, you know, a condo wouldn't be bad if I can make the number, I can find the right deal, I'm finding a condo. Like there are deals left and right there. I mean, I would just have like an assembly line of offers going out. The problem is HOA fees and stuff, but if you can find one at a massive discount, could be an opportunity. But yeah, condos are getting beat up. Beat up. I've seen some of these homes taken over, tax bills not paid. You can't look in them and you have to evict the tenant. Yeah, that's no big deal. That's no big deal. I mean, you just have to follow the process of where you live, right? People are scared about those things, but don't be. Like, it's not your typical way to buy a home. But I know many people who have purchased a home on a tax foreclosure or a regular foreclosure. There was a tenant in there. The tenant had destroyed the house, but they bought the house at like, 50 grand when the homes in the area are going for like 300. So they bought the home at 50 grand. They went through the right channels, evicted the tenant, went in, cleaned out that nasty house, and it was nasty. Like gaggy nasty, like Texas Chainsaw Massacre nasty. And then they cleaned it out, gutted the place, redid it all, ended up spending $150. So now they've got a $200,000. They're all in on 200 grand. And the ARVs in the area are 300. Talk about catching a falling knife. Nope, you didn't. You're already 100 grand under what everybody else is paying. So that's the beauty of this market right now. It's there are opportunities all over the place. I always hear that the median home price is lowest in West Virginia. I wonder what that means for Eastern Ohio, like Athens or Cambridge. Are median prices lower in that part of Ohio? It's a great question. I would imagine they are lower, but I would imagine they are lower. But that's just because it's rural Ohio. And you're right, West Virginia. I mean, you think about like Eastern Ohio, a lot of it's rural, most of it is, and then West Virginia, a lot of it's rural, right? So I think, the rural areas, the median home price is not as high. Oh boy, who day? No, that's all good, man. We day, right? Remember Bill Cowher doing that. Does Resi Club show days on market? Yes, they do. Maybe I'll get to that. Muskegon, Wisconsin. I'm sorry, Muskegon, Wisconsin. Muskegon, Michigan. Okay. I'll look at that one. Thanks, Josh. Our condo market is driven by Cali people moving here, and clearly that's slowed down. I wouldn't doubt it. Yeah. All right. Let's see. House prices are slightly cooling. Good. All right. Let's look at this Moody's article, though. And then I'm going to go to somebody requested a Michigan area, and I've got a couple other requests really to get to. But let me show you this Moody's thing, and this will just be a minute. So this is an article from Resi Club. I don't think it's this is a premium article or not. But they say, so Moody's, this is I'll put it in the description, the link in the description. And I don't know that this is a premium article. I think everybody can access it. Basically, this is an interview with the chief economist from Moody's Analytics, Mark Zandi, on the housing market and how they think it's going to perform over the next 10 years. I thought this was very telling. So this is their chart telling where they think home prices are going to go. The black line is what's already happened. The blue line is how they think it's going to perform over the next 10 years. And you could see there's no crash in sight, but what's not in sight is a insane increase. So they're saying basically 2026, that's next year, home prices are going to be up 0.5 percentage point. That's it. Then in 2027, 1.35, you get the picture, right? 2028, 2.39. But look through this. Like, Home prices are actually, he says the growth's going to go up, but then come down. But what you don't see is a crash. You don't see a crash on his forecast. And he's like, hey, look, home prices, like Bonnie said, she just put it on there. Home prices are cooling. The growth is cooling, but don't get it twisted. It ain't crashing. And depending on your market, like there are areas of Florida, Texas, Denver, where prices are coming down 20% in a few years. That's a crash, right? But then there's areas like Columbus where they're just kind of like stagnant, up a couple percentage points. Anyway, I thought this was pretty interesting just looking at it. I'll put it in my I'll put the link in the comments below. And then he has a map here that you can click on to see how your area is going to perform over the next 10 years. I mean, it's pretty much easy to figure out. The South, the Sun Belt, isn't going to grow as much as the Northeast, the Midwest, because, there's much more building. And that's the other thing, new builds, right? A lot of new builds signals a decline because there's just more inventory. All right, so that's that. Now, someone wanted to know about Resi Club, and somebody asked about this. Muskegon, Michigan. So I'm not using Redfin here because Redfin may not have the data I need. So I'm going to go to Resi Club. And this is their terminal. They call this the Resi Club terminal. For you can pay for their subscription and you get access to all their data across the US. There we go. Now this is the county. Did you want the metro though? Let's do the county. All right, year over year, you're up 2.3% in Muskegon, Michigan. You can kind of zoom out here. We can take a look and see what the other counties are doing. See what I mean? Look at this. You've got this county, Mecosta, down 0.3%. Then just north, you've got one up 3.7%. So it's cooling, like Blue Bonnie said, and she's in Michigan. In fact, let me see. Well, let me finish out Muskegon first. So that's prices. You're up 2.3%. Let's look at home price shifts since March of 2020. You're up 54% since 2020 in prices in that county. And then if I look at home prices in general, you can see where they've gone. So like, for instance, in what's that? October 2012, home prices, the typical home in Muskegon County, Michigan was $78,000. Now, 238. 234. I'm sorry, 239. $239,000. Let's look at inventory and see how that's doing. You're down 0.5% in inventory for sale in Muskegon County. Active inventory since 2019. You're still down 15%, almost 16%. If you compare inventory of homes for sale since 2019, that's kind of the demarcation line people use. Like if you have more inventory than you did before COVID, your home prices are probably decelerating faster. If you have fewer homes for sale, you're probably still going up in home values. And that's what we're seeing, right? For the most part. This will blow your mind. Look at this. These are active inventory of homes for sale. You have 426 homes right now, right? Back in September of 2019, you had 504 homes for sale. So you have fewer homes. Somebody asked about days on market. Yeah, we've got days on market. Look at this. 46 days on market, meaning on average, or the median time a home sits on the market before it's sold, 46 days. I mean, you go back last, 42 days last year, 44 days the year before that, 42 days, 35 days, 48 days. Wow, go look at this. September of 2016, 84 days. Wow. So you're selling homes a lot faster than you did back in 2016, but they're slower. They're sitting on the market longer in Muskegon County, Michigan, than they were last year anyway. I'm just going to go back to pricing real quick and see something. Yeah, look at this this is crazy. Back in 2021, home prices for your county were up 23% in August of 2021. 23%. That's crazy. Right now, you can see it's cooling significantly. So again, I view this as a correction, not a crash. That's how I view it. Because you're not down 20%. You're still up year over year, 2.3, but you're not up 25% anymore, 23%. So that's kind of how I look at that. All right, that's Muskegon County, Michigan. Pretty neat, right? Yeah, so Super Tech Boy, you wanted to know days on market. Let's look at that and see what we can find. Let's see, median days on market. Yeah, so this shows us by state median days on market and the increase or decrease. So like Ohio, 5 more days on market, meaning homes are taking 5 more days, 5 days longer to sell. Sorry. North Carolina, 9, Florida, 14, Georgia, 11, Texas, 7, Louisiana, down 6. Actually, homes are selling faster in Louisiana. Nebraska, down 2. The brown states are where it's down year over year. The blue states are where it's up year over year. And if I look from a metro standpoint, this will tell us, where some of the pain is. So like, look at Elko, Nevada. 25 days longer. Homes are sitting 25 days longer in Elko. Look at Red Bluff, California. Whoops, I'm sorry, not longer. I'm sorry. Yeah, 25 days longer in Elko, my bad. In Red Bluff, California, the opposite end, they're down 23 days. Homes are selling 23 days faster. Riverside, 13 days. You can just see the brown is down, the green is up. If I look at a county level look, you can see in Ohio, it's basically all up. But the Northeast, there's a lot of areas where it's down, like Wayne County. I think that's Wayne County, New York, down 30 days. Yikes. So anyway, that's what that looks like. Like we can look at days on market and see how it's performing. We can also look at new listings. This is pretty telling. Check this out. This is versus 2019, where new listings are up or down. Again, people will tell you that there are distressed sellers flooding the market. Well, if that was true, you would see new listings higher. than they were in 2019. Well, the brown is down. Are you seeing more brown? Are you seeing more green? I see more brown. Just calling it what it is. Like in Ohio, there are areas like Noble County, new listings are up 250% versus 2019. Wow. Right? But if I go down to Florida, look at this. Hillsborough County, Florida. Let me do a metro. That'll probably help me out because I don't know some of these counties. Tampa, right? Down 18 days. So homes are selling quicker now in Tampa than they were. I'm sorry. New listings are down 18% versus 2019. 18%. Albuquerque, New Mexico, down 34%. Riverside, down 26%. This is crazy. Los Angeles, down 20% in new listings versus 2019. Now, there are some areas that are up. Pahrump, Nevada. I know somebody who lives there. Up 26%. So there are more new listings in Pahrump, Nevada. But it's not nearly like it was in 2019 before the pandemic. So what does that mean? I'll let you decide. But like in Houston, look at this, down 6% since before the pandemic. No one ever talks about this stuff. They're why, I don't know. I maybe because they don't like the data. They think it's cooked. Look at Cincinnati, Ohio, down 15%. Chicago, down 26%. Some of these other areas are ridiculous. Springfield, Massachusetts, down 36%. Bradford, Pennsylvania, down 50%. Philly, down 20%. I mean, all these areas have fewer new listings than 2019. Nuts. Crash was always a fake narrative. Yeah. I don't understand, I don't understand the goal of that, of telling people that. It's almost like they haven't done anything in the market or they're afraid to do anything all the time. When prices are low, there's a lot of folks that are afraid to do something. And then when the prices are going up, they're like, oh, they're going to go up. They don't want to buy. And then when they start to fall, they're like, it's a falling knife. We don't want to touch it. It's like, okay, well, when they're low, you don't want to buy. When they're going up, you don't want to buy. And when they're coming down, you don't want to buy. So the buying windows like that, it's like really tiny. Like, hey, if the moon and stars align exactly correct, I'll be able to buy a home. It's like, but that's not how the world works. Where have you been? The market marches on with or without you. I agree. It's like, I don't understand that narrative. It's odd. Just give them the facts. It's not crashing yet, but it will. The headwinds are overwhelming. Salaries cannot support home prices. Tech layoffs, FHA guardrail, remove student loan repayments. I agree with all that. Those are all headwinds. I'm not saying they're not, but I don't see it in the data yet. So I'm just showing you that data. And more so, like, again, the government backs 85% of the loans. I mean, you know that like the administration has extended the student loan repayment thing. Like there's like millions of borrowers right now still not making payments. And the deadline for that is like 2028, conveniently when someone leaves office and someone comes in, right? I mean, they are who we thought they were. I'll use a Denny Green line. They are who we thought they were. They're going to extend and pretend. They're going to kick the can down the road. Now, is that the right thing to do? Absolutely not. They should face the music, let prices fall, let foreclosures hit the market, let pain come in. Because if they don't, it's going to be it's going to be even worse when it all does come through. But right now, all the indications I see say they will prop up whatever they have to prop up to make sure the average voter does not feel disenfranchised. So there are a lot of headwinds, but until the headwinds hit the data, I'm not that I continue to show, and I'll just continue to show the data instead of hoping, wishing, and wanting something that hasn't come yet. If they don't extend and pretend, and I'm completely wrong, and they let FHA completely crash and burn, we'll see it. We'll see it in new listings first. We're going to see it in new listings first, not in foreclosures, but we'll see it in new listings. So watch new listings in your area. County or metro is fine. Yeah, looked at that, Josh. Hopefully that helped. You're welcome. Elko is literally in the middle of nowhere, and the only employers are mines. You'd think it's be booming with precious metals prices. Maybe, but I guess nobody lives there, so that's probably why new listings are up a lot, or days on market are up a lot. Super Tech Boy, do you think banks are being more conservative with foreclosure proceedings to keep people in houses rather than flooding the market with inventory? I don't know. I mean, I think that in general, banks don't want to foreclose because it's expensive. It's expensive to do that. But the real data is what's happening in your local market from a number standpoint, and foreclosures are included in that. So look around. I mean, you could even go to Zillow if you wanted and filter for foreclosures. Write down how many foreclosures you have today. Do it right after this. Write down how many foreclosures. Then next week, do the same thing. The next week, do the same thing. The next week, do the same thing. And then look at it and see if there's a trend. You'll know, oh, foreclosures are increasing. Oh, no, they're not. Like, this is not bad stuff. This is all opportunity, just sitting here. The narrative of stay on the sidelines again because it's going down will be the same narrative you hear if prices all of a sudden start to go up again. Or if prices crash, you'll still hear that. Like, I want to know from the crash bros, like, at what point do you buy a home? Like, are you trying to time the very bottom of the chart? Like, impossible. So just go out and hunt for a deal. And if you do, and you hunt hard enough, you will find a deal that cash flows even with property taxes. You just got to go find one. They're out there. The financial system is going to collapse due to circular accounting. Tricolor and First Branch are the first couple dominoes. I don't discount that. That is a monkey business, kabuki theater, goofy, stupid things. I agree 100%. But I'm just not seeing it in the housing data yet. Just not. I would caution y'all that if you hear someone talk about the housing market and they tell you that the books are cooked and the data's cooked, but then when the data goes their way, they show the data. I don't listen. That person's a clown. Like, you can't look at this data and I'll tell you, like, I would never tell you, I hope I haven't, and I hope I never will tell you this data is fake because I don't like the way it's going, whatever way that is. And then when it goes my way, I'm like, see, look, prices are going up. That's nuts to tell somebody that it's fake. It's like almost building distrust with your viewers so they stay scared. That's just not right to do to people. I'm just going to tell you, this is what I'm seeing. Here it is. I didn't curate this data. And this data is what everybody uses. Like, any YouTuber you see is using some form of this, either Zillow, Realtor.com, Redfin. So to call it fake when it's not going your way is pretty weak and disingenuous. It's bigger than the housing market right now. Overnight repo market has been getting clobbered. The tricolor issue is going to be systematic. Yeah, that's why they're going to start quantitative easing, right? Surprise. Surprise. They're going to extend longer, right? Surprise. The government's not concerned about inflation. They're concerned about deflation. And they will do what they have to do to get inflation coming back. In whatever regard that is. I mean, food prices are still elevated. Car prices are still elevated. Home prices are still elevated in 76% of metros. If they start to come down, they'll just make lending easier, lower interest rates. And once lower interest rates won't help, they'll figure out some other way. This just is what it is. In a fiat currency system, that's how they operate. I mean, look up the uneducated economist. Look that dude up. He's got it going on. And just even Jack at Nobody Special Finance, he actually will say, and you can tell how he operates is, I don't trust that the government won't continue to kick the can down the road. He thinks that will happen because he's experienced that. Look at what they do, not what they say. They do lower rates. They do extend and pretend. They prop up investors. They prop up those closest to the money. They discount and disregard the other folks out there. This just is what it is. So, uh, to Simon's point at the uneducated economist, that's why you got to own assets. You want to be close to the money. Myth, you have to cash purchase foreclosures. Fact, you can finance a foreclosure immediately. Contact me for more details. That's awesome. Thank you, Steve. Great point. He's saying you don't have to pay cash for a foreclosure or an auction. You can finance it. And if it's, correct me if I'm wrong, Steve, but if it's like a government house that's been foreclosed, you could use like a 203K loan, right? Maybe, and repair it. Because there's a lot of auctions, folks, that happen out there that are not, they're not meant for investors. You have to be a homeowner to move in, like an owner occupant. And those are great opportunities for people. Just Google it. Google HUD auctions, and you'll find them. And there's websites all over the place where you can find them. It's a good point on financing. Now we are hearing the car market is crashing. Yeah, I mean, am I surprised the car market hasn't completely crumbled yet? I guess I'm surprised in a way, but I'm also not surprised because somebody's doing some kind of something to keep it going because they don't want that asset class to go down, even though a car's not an asset. I would say they're less like, and I mean, they bailed out the car makers before. They'll do it again. A lot of people, I heard this from Melody Wright recently. She said that she thinks that Buffett bought, and to this point, he bought into D.R. Horton. He bought a bunch of shares of D.R. Horton because he thinks the builders are going to get bailed out soon. And that's why he did it. So I completely think that it would make sense that the car market doesn't crash because they're going to prop it up. I mean, there could be a crash of like, hey, all of a sudden these banks failed, like Tricolor. Oh, they all fail. What does that mean? Well, it means we got to step in and print some more money, give them a boost. Not the right thing to do. Don't get it twisted. Don't think that I am for government printing money. I'm not. But that's the society we live in. And so I have to play the hand I'm dealt. To wait for a situation that is false or not what I've experienced my entire life would be disingenuous to myself. I've got to play the hand I'm dealt. I'm just waiting for houses to come back to income. I know that. And they could get better. If you look at that Moody's thing, right? If we look at this Moody's forecast, look at this. Like in the last 2 years, I have to look this up, but I'm pretty sure over the last 2 years, income growth has exceeded home price growth. We're only up a couple percentage points. Zillow has this flat year over year, basically, in home prices. So with these prices, home prices only growing 0.48, 1.35, 2.39, 2.78. That tells me it could be just a slow grind sideways until incomes catch up more to home prices. So when people say I'm waiting for whatever to buy a home, waiting for affordability to return based on slower home price growth and larger income growth, that makes sense to me. Because that's what I'm seeing in the data. I'm seeing lower home price growth. I'm not seeing home prices grow at 12% anymore. And so even if home prices fell by 1% year over year, or 2%, or even 5% nationally, so what? Okay, 5%. Now, if your income grows by 3%, now it's a difference of 8% immediately. Oh, good. Maybe you can buy a house then. I would argue that there are homes out there for sale right now that you could afford, depending on where you live and how hard you look. There are homes out there. You just have to hunt and make a lot of offers. That's the environment we're in. You got to find a desperate seller, somebody that needs to sell, doesn't want to sell. So that's what I'm seeing. I'm seeing a lot of, I'm seeing home prices, the increase decline or compress rather. Like if I look at this, all I have to do is click this. I mean, this is pretty telling. This is a map of the US, obviously. This shows you where we have more or less inventory than 2019. And so in Texas, you have 30% more homes for sale than you did pre-COVID. New Mexico, you have 16% fewer homes for sale. Illinois, 60% fewer homes for sale. Ohio, where I am, 30%. Pennsylvania, 38% fewer homes for sale. Look at New Jersey, down 57%. Look at Vermont, down 50%. Connecticut, down 70% in the number of homes for sale. 70%. I mean, it would take invasion by aliens to crash prices in that market. There's nothing for sale. And there's a lot of people that live in that market. So it's not a population thing. But then you go to like California, down, they still have fewer homes than the before COVID. Look at Washington, up 25%. If you're in one of these states, right? Nevada, McConaughey, right? You're in Reno, up 4.4%. I don't know. I look at that and think, you know, they're gaining inventory. So it could be some opportunities out there. Tennessee, look at that one, up 34%, 35%, whatever. If I look at this home prices, look at home prices. This is where they're up and where they're down in the US. Look at Florida, down 5% year over year, right? So home price growth is cooling. Texas, down 2.5%. California, down 1.7%. Oregon, down 0.4%. Washington, down 0.1%. Wyoming, up 5.2%. Yikes. Kentucky, up 4.7%. Ohio, up 3.4%. New York, up 4.2%. Connecticut, up 4%. Tennessee, down 0.4%. So this is where home prices are growing the most. And if I look at, well, here, check this out. Somebody was asking about condos. Look at this. Look at condos. This is condo prices year over year. How are just condos doing, not single family houses. Look at Texas, down 5.5%. Look at Florida, down 10% year over year in condo prices. I think McConaughey asked about this maybe. Yeah, he was saying Reno, right? Down 2.3%. In fact, look, I can't help myself. I love looking at this data. Look at Reno, Nevada, and condo prices. How are they doing? Reno, Nevada, condo prices down 2.7%. This is according to Zillow data, though, not Redfin. But that's just year over year. But I mean, some of these markets are bleeding red with condo prices. Dallas, down 7%. Houston, down 6%. Denver, down 6%, 7%, whatever. But again, just like most other things, the Midwest is like, nah, kick rocks. Columbus, though, flat basically with home prices, with condos. These are just condos. Here's something else to look at. This is the 10-year home price appreciation. How much of home prices overall, all types of properties, all types of residential, not commercial. How have they fared in the last 10 years? Well, Louisiana in the last 10 years, home prices are only up 18%. North Dakota, 22%. Ohio, 93%, right? Florida, 106%, even with the declines they've had. Texas, 76%. New Hampshire, 115%. Maine, 113%. Look at Idaho. Goodness gracious, up 143% in 10 years. If I do since COVID, we get a similar look. Like, look at Louisiana, since COVID, only up 6.1%, but there isn't one state that's down since COVID in home prices overall. Ohio, 50%, Florida, 48%. Ohio has more growth than Florida. Look at that. California, 36%. Texas, 35% since COVID, since March of 2020, right? Again, look at this map. Look at year price year over year. Here's year over year pricing, right? Again, there are markets that are down and there are markets that aren't. So that's what's happening there. I like that look. I think it kind of gives us a overview of the reality versus the whatever, the narrative to keep you scared. Why they want to do that, I don't understand. Like, I don't know. It doesn't, it's sad, but everybody's got their thing. If we look at demographic of population, most homeowners are of the boomer generation. I question if we will have seen the highest home prices of our lifetime. Well, that's an interesting point. You guys have heard about the 15 million vacant home discussion, right? I'm sure you have. I did some checking. It's not 15 million vacant homes. It's 15 million vacant units. A lot of those are owned by boomers, but it's units, not homes. Why is that different? Well, that includes multifamily. So when I did the math, it was closer to 5 million vacant homes. Some of those are for sale. A lot of them aren't. So how does the vacant home stat help us in the housing market? It doesn't. I would say this falls into that too. Thank you, meaningful mentality, by the way. Like, you have to look at the type of homes that are out there. A massive portion of properties were built before 1950 in the US. 1950. So if you fast forward 10 years and a bunch of boomers have passed away, I'll give you an example, a real example. My father's home. He's still alive. He's old. At some point, he will leave this earth. When he does, he will give me his home. That's how it works. Now, I have some other siblings that will own it with me, and our plan is to rent it out. However, by that point, it's going to need probably new plumbing. It was built in 1950. It's going to need new plumbing. It's going to need new electric. It's going to need a new roof by then. It won't need new windows probably because we just put those in, but it's going to need a new kitchen. It's going to need a new bathroom. It's going to need new flooring to rent it. The point is, unless you who are watching this right now are okay with renovating a 1950s home, because that's the inventory that's out there. Because remember, a lot of people are telling you, we don't need any more new construction. The builders have overbuilt. Tell me if you haven't heard that narrative. Well, if that's true, then everybody out there should be all the younger buyers, like kids like my son's age who are 13 years old. Once they get this flood of awesome inventory from all these boomers that are dying, they just have to be prepared to do a lot of rehab work. Or those homes will be bulldozed. So I don't think it's going to be the nirvana of real estate that a lot of people are hoping for. And to wait for somebody to die for you to get a house, to me, is not a great strategy. And if you think home prices have peaked right now, make your offers as such. Like, if your home, it's on the market, if you see one for 300 grand and you think, man, that's going to be the highest price we see in our lifetime, make the offer at 200 grand. Find one for 200 grand. They're out there. They'll just need a lot of work like they will in the future. I think it's a tactic used to keep you from doing anything except save your money in a savings account. Right? Have we seen the highest gold price we'll see in our lifetime? I don't know. But I'm sure there's somebody saying that, trying to keep you from buying anything. Don't buy anything. Don't do anything. It's better just to not do anything. That's crazy. Like, we're not going to be on this earth that long. So take advantage of it. And if home prices never they're still growing, by the way. So I guess in 2 months, if home prices are higher than they are this month, then I guess we are seeing more home price growth. And they haven't been the highest in our lifetime yet. But if they do fall, make offers as such. Right? Find a house that's 100 grand off retail. Okay. Now if home prices drop 100 grand, you're not worried about it. Somebody has to live somewhere. Either you will own a property and not rent, or you'll own a property and somebody will rent from you, or you're going to rent from somebody else. You have to live somewhere. I would rather, I'm not actually, I would rather, in an odd way, I'd rather rent and own rental properties where people rent from me. Owning your own home that you live in every day and have to take care of isn't all it's cracked up to be. I know a lot of successful people in real estate that rent because they don't want to deal with a house. There's a lot of upkeep. There's a lot of, oh gosh, and there's no cash flow. So you either own real estate or somebody else will, and you'll rent from them. And to me, I want to own real estate and assets so that other people rent from me. All the people on the sidelines that are not buying are renting from somebody who did buy. That's just a fact. Anyway, I just don't want y'all to be fooled, and I don't want you to sit on your hands and do nothing because somebody else is scared out there and they haven't done anything and now they're telling you not to do something. McConaughey, I believe it was also a problem connected with Bed Bath Beyond. Shareholders in shambles, some have gotten warrants 9 days ago, still many have not. Bed Bath and Beyond, who would go in that store now? Like, that store was doomed once the internet came around. In 2003 through 2007, many investors were greedy and started over leveraging. It was easy because lending standards were loose. And by 2008, the shooting stars hit the fan. Agreed. Yeah, you're right. And and the other big thing is Fannie and Freddie were not owned by the US government, right? 85, I heard this from Melody Wright, and I thought, thank you, Melody, for sharing that data because she's a mortgage expert. 85% of all loans are backed by the US government right now. 85%. What does that mean? That means 85% of the mortgages out there are basically in a situation where if it got really bad, you'd have to think the government would say, wow, we can't have this now. Not on my watch. We got to prop this up. That's a major difference. Before, they didn't own Fannie and Freddie. They had to take them into conservatorship because of the debacle. Now look at the home builders, right? Home builders have dialed back their building. We dropped from 9.5 to 7.5 months of supply for new homes in a month. Recently, just last month, right? So builders are smarter, I think. A lot of them are, not all of them. A lot of them are smarter and going, we're not going to build as much right now. Lumber, there's no lumber being used right now, right? Lumber supply is at an all-time low for this cycle anyway. Lumber prices are low. Builders are not buying lumber, and you can't build a home with no lumber. So I agree. I think you had a lot of speculation from easy money that was much different than it is now. Like 85% of the mortgages had to go through a qualification process. They just had to. Before, they didn't have to do that. They're stated income loans, 100% loans for owner-occupied properties. But don't think I'm saying there aren't going to be pain. There's a lot of investors with pain right now, and it's going to ramp up, I think. I think there'll be more and more opportunities to buy properties coming up because, a lot of investors went way over their skis recently. I know of several that are bankrupt, and they owned multiple properties, like 20, 30 units, and they went bankrupt because they bought way too high. There's a lot of inventory in Columbus sitting on the market rotting right now because investors, flippers, did not know what they were doing. So that's your opportunity. See, that's the thing. Like, you can't escape opportunity there for you. It's there somewhere. With more houses on the market, easy to go find one. Easier to go find one. That's a good thing. Take advantage of it instead of, staying home. So I don't believe the market will correct as quick as it did in 2008. I agree with you. I don't think so either. And look, I'm going to be here every step of the way. Like, my long-term plan is to be on YouTube for until I can't do it anymore at this point, unless something changes and I go a different direction. But right now, I'm going to be on YouTube for a long time, and I will be here every step of the way. If the prices crash, you better believe the housing nerd will cover it. I will cover it with 100% honesty. I will show you where it's crashing. I'll show you where it's not crashing. I could be sitting here in the next 10 years with you going, man, remember 10 years ago I said, Coors Light and I were like, it's not going to correct like it did in 2008. Oh no, home prices are down 50%. Oops. I'll show it to you. I'm not going to hide. You think the money printer will stop a collapse? No, I think it will just make it worse when it does happen. Whenever that does happen, however that looks. It'll mask it. But that's my point. I'm talking about reality. Like, I don't, until that point comes, I'm going to keep going. Right? It's just like people are like, oh, AI is crashing. The stock market's going to crash. I don't hear anybody saying gold's going to crash. But I'm just in it until it doesn't work. Like, so you just watch it and go, okay, is inventory building in my area? Yeah, it's exploding. Okay, when I make an offer on the next house, I better make a low offer. So I just play the hand I'm dealt instead of projecting about what I wish would happen. And by the way, if the economy crashes to the point that this all comes falling down, it won't matter anyway. Like, you know what I mean? Like, most people won't be able to buy a house anyway. So a lot of people on the sidelines right now won't be able to buy when the market all falls apart. And then when the market goes back up, because all the investors and people pile into the market again and buy for pennies on the dollar, those folks will still be sitting there going, well, it's going up now. I'm going to wait till it heads down. It's like, okay, now you're 80. How does that work? Right? So I don't think the money printer is going to save the economy. It's going to make the problem worse, but that's what we've been handed. We don't control monetary policy. Oops. I don't trust Zillow info. It's manipulated. Understood. But that's what, and I don't know who else you follow, man. Skyfall. That's a cool name, cool avatar or picture, whatever. Great movie. I think one of the best Bond movies, in my opinion. So I understand your hesitation here. I completely get it. And I'm not discounting it. That I don't work for Zillow, so I have zero idea what they're up to. But it's the only thing I have. Well, I mean, I have Redfin, Realtor, Zillow, but it's also what everybody else uses. So, I feel like if it's manipulated, everybody you're watching, the data is the same. Like Reventure Consulting uses Zillow data. Melody Wright uses Redfin. Travis at Real Estate Mindset uses Redfin all the time. Although he does use other ones too, like I do, Zillow and everybody. But the point is, all these other folks out there use one type of measure of home prices. So I showed you Redfin earlier today or on the live. Now I'm showing you Zillow. They're pretty much nearly identical. I mean, within a few percentage points. So it's what we have. And so I guess as long as you're not the type of person, Skyfall, that's looking at the data going, look, home prices are falling like a rock. The crash is coming. Yes. As long as you're not doing that, then fine. Don't trust any of the data. But you can't look at the data and not like it because it's not going your way. I'm not saying that's you, but I just plead, don't do that, because you're lying to yourself. Lying to yourself is the worst. Another headwind for sure. Super Tech Boy, what time is it? I got to go here in a minute. I don't think people realize how much work many of these silver wave homes will need. Kaboom. Folks on fixed incomes getting priced out with property taxes probably won't be making major repairs. Bro, no one gets this. Well, it's because they're not actually doing it. That's why. I just closed. I helped a client buy a home not far from me. They bought a home for they bought a home in a low $200,000 price range. They're going to use it as a rental. They're going to put maybe 150 in it, maybe 175. But it needs everything. Now the ARV on it, the actual value of the home, when it's all said and done, it could be, I'm sure it'll be a lot more than what they paid for the house and the rehab. But it needed everything. It was an estate sale. It was a boomer home. It was a home where the boomer passes away. The kids don't know what to do with it. They end up selling it. That's what I'm inferring. I don't know that for sure, but that seems like what occurred. Okay, great. They sold the home. Guess what? To buy that home, you got to bring 150, 175 in repair costs. And it needs everything. It does. It needs, they're doing roof, electric, siding, windows, flooring, kitchen, bathrooms, moving walls, foundation, clearing the lot, gutters. I mean, everything. You see that guy on the Professional movie? The movie The Professional? He's like, everyone, everything. It's everything. You're 100% right, Super Tech Boy. No one talks about this because it doesn't fit the fun narrative that just sit and wait, because when boomers die, the silver tsunami will come and real estate nirvana will rain down upon you. And that's what they're saying. It's like, nah, exactly right. People are getting priced out with property taxes, property insurance. You think they're repairing their roof? Nah, they're putting a tarp on it because they can't afford to make the repair. And that house doesn't magically get fixed when it goes on the market. Nope. And a lot of these homes will be bulldozed. A lot of them will be bulldozed. So will there be move-in ready, beautiful homes to buy for pennies on the dollar that are in the great school system on the corner lot with no work needed? Sure. Well, will they be pennies on the dollar? No. Somebody will buy it, right, for the market price. There will be opportunities out there to snatch up an old boomer home, but you have to put some work into it. Remember, virtually half the homes in the U.S. were built before 1950. So while people think we've overbuilt, all they're doing is driving new subdivisions. They're never going into these houses that were built in 1920, 1930. In Ohio, only 1.7% of all homes were built after 2020. 1.7%. That's it. A good portion of our homes here are built before 1940, 1930, 1920, 1900. They need everything. And so you have to take that into account. And if you don't, for them not to mention that is really like, it's not cool, because you're getting people to not do anything with their lives in real estate and then thinking that the silver tsunami from people dying is going to save them. Well said, Super Tech Boy. Thank you. And even if they have been making major repairs, the house is probably very dated: flooring, paint, kitchen, bathrooms, which you don't have to fix necessary to live in. And as long as it works, who cares what it looks like? But you're right. I work with younger home buyers all the time. One thing's for sure: most of them don't want a project. Some do, and they're the ones actually buying and getting deals. But the ones that can't see the fact that the value is in the house, not the granite countertops, they're stuck on the sidelines waiting for the silver tsunami because they think the granite countertops are going to fall in their lap. But yeah, all of it's going to need updated, man. It's wild to see people living full-time on a cruise ship, man. I couldn't do that. Oh, crap. I don't want to be around for another 2008. That'd be interesting, right? I agree. Thank you, Coors Light. You're right. Silver tsunami. That's the goofiest thing I've ever heard when people talk about that. I'm like, man, you don't do this work. Like, you're not out there swinging a hammer. I have how many the people that spit that, like, I would love to know with like Danielle DiMartino Booth, how many homes has she gutted from 1910? How many? Zero, right? Zero. You know it. She's not out there doing the work. She's like reading a chart and then going, let me come up with this narrative to sell my clicks. If a young person can't afford a home now, they should brush up on their home inspection 101 knowledge in the meantime. 100% agree. Yes. And get good at quoting rehabs. Get good at understanding how much kitchens cost, how much foundations cost, how much roofs cost. Yep. YouTube can help you with all that, right? Thank you, Coors Light. Do you think we'll see subdivisions of unsold home bulldozed in the near future? Yeah, I do. I do think so. I saw it. I lived in Southern California in 2000 and like during the GFC, I lived in SoCal. I wasn't in real estate, but I was in the construction business, like as a service of construction, and I saw home after home after home empty and being bulldozed. Yep, I saw it. And the vacant home thing, it's vacant units, meaning there are 15 million vacant units. Look at the Fred chart. It's not homes. The next time you hear somebody say 15 million vacant homes, ask them if that's homes or units, because what I'm seeing from the Fred chart is 15 million vacant units. And by the way, what does it matter if there are vacant homes? What does that matter, right? Who cares if there are vacant homes? It's not against the law to own a vacant home. It's not against the law. It's not against the law to buy 10 homes and leave them vacant. It's their home. Let them own it. I'm not saying you're saying this, but I hear that from people. Like, we have 15 million vacant homes. We don't need any more we don't need more homes. You're like, yeah, but those 15 million vacant homes aren't for sale. So it's not like they're sitting there waiting for somebody to just go and claim it. Like, just claim this home, it's yours. No, it's somebody owns that. You can't tell them to sell their home. It's either a builder, a municipality, the federal government, mom and pop landlord, Johnny homeowner, Jimmy Smith homeowner, Susie Q homeowner. Somebody owns that property. And if it's not on the market, what does it matter? If it's on the market, you could buy it. If it's not on the market, you can't buy it unless you make them an offer directly, which you can do. The point is, it's not like these 15 million vacant homes are the panacea of our real estate dreams. It's like, well, they've always been vacant homes. Look at the chart. In fact, look at this. I can't let this go. Look, plain as day, folks. Housing inventory estimate, vacant housing units in the US. And if you notice, it's eerily close to what people claim we have, 15 million vacant homes. They say 15,433,000 vacant homes. What do you see from the chart? What do you see? I see that we had 18 million vacant homes during the GFC. Now we have a heck of a lot less, and it's been falling for the last decade, right? More than a decade. So at the end of the day, these are units, not houses. So this could be a multifamily building. So if I build a building with 100 units in it and half of them are vacant because they're, let's say I just finished the building and I haven't leased them all. I've only leased half. That's 50 units of the 15 million that are vacant. It's not like there are 15 million vacant homes sitting in these subdivisions just ready to go. And the builders are like, you know what? This is really, this is just for, just for the taking. But people haven't seen it yet, so they haven't taken it. It's like, no, these are owned by somebody. If they need to sell them, they'll put them on the market. If they don't need to sell them, they won't. If they're not for sale, how does that help you? What you have to pay attention to is the inventory of homes for sale. How many homes are actually for sale? Not how many homes are vacant. There's always been vacant homes. Look, there were vacant homes in 2002. Look at in 2003, we had 15 million vacant homes. In 2009, I had 19 million vacant homes. I don't know, I'll pick a date. Q4 2017, I had 17 million vacant homes. Did you hear anybody complaining about vacant homes in 2017? I didn't. And look what happened. The demand spiked. And guess what happened? We still had this is insane. After even in the height of COVID and the inventory rush, we had 13 million, almost 14 million vacant homes. We've only increased the vacant homes less than 2 million homes. I'm sorry, 2 million units. I keep saying homes. It's easy to say homes, but 2 million vacant units. So it's not like is it skyrocketing? You tell me. And here's the other thing. Look at this. I got data for days. Look at this. New home. Dang it. Monthly supply of new homes. These are the new homes that are finished but unsold. Oh boy, what do you see here? Look at this. In 2009, we had 12.2 million. I'm sorry, this is thousands, right? Oh no, I'm sorry, this is months of supply. So we had 12.2 months of supply, meaning it would take 12 months to buy all the inventory at the current pace. That's an oversupply, right? We had an oversupply. Look what happened. It fell off the face of the planet and it was very low, 5.5, 5.5. Then it spiked because builders built to take advantage of COVID. They did. And it spiked all the way to 10, right? Is it 10 where it spiked? Yeah, 10.6. Then it fell fast. Then it went up. And then look what happened just last month. It fell from 9 to 7.4. Now, I'm not saying the data is not cooked. I'm not saying they're not going to revise the data, but you can't use this chart one month when you like the data, and when you don't like the data, you're like, I don't like this data, I'm not going to use it. It's like, no, it dropped 7 to 7.4 months of supply. Builders are taking their foot off the gas. So people, I mean, if I'm out looking at a house, I'm looking for a home, I'm looking for new builds, definitely, depending on where I live. I'm looking at new builds. All right, that's my rant. That's my rant. I think we'll see bulldozed homes. Are short-term rentals considered vacant homes? I think they are. I think they are. I think you know what? I don't have time to look at it right now, but let me do some checking on that. All right, yeah, I'll check on that. Okay, thanks, Super Tech Boy, for that question. Yeah, I appreciate that. I'll look at that. All right, folks, look, thanks for interacting today. I hope it was educational somewhat. I hope I dispelled some myths that you hear. And, you know, I'm not saying I'm 100% accurate. I'm just looking at the data and presenting it to you. I got to go because I got an awesome interview coming up with somebody that I think you're really going to enjoy once I publish the video. And yeah, I actually I thought I was going to get arrested yesterday because I was doing a video and somebody didn't like where I was doing the video. And anyway, that's a story for a future time. But that was an interesting thing that just happened. Closed on a couple deals, walked a couple properties for investments, looking at a couple new builds for rentals. Yeah, a lot going on. So look, I hope you have a great day. The housing market's ever changing. Stick with the housing, or I'll be here every step of the way, showing you the data, showing the reality. I'm not going to paint a rosy picture. And I'm not going to tell you the market's going to fall off a cliff unless it's falling off a cliff. And we'll see that in the data. So, all right, have a great day, great weekend. It's fall. Go out, rake some leaves, and jump at them. All right. We'll see you. I'm the housing nerd, and I'm out.